Hey everybody, this is Jim at SP500chart.com. It's Sunday afternoon, about 2 o'clock. We're going to get this done before the futures market opens up this evening at 6 Eastern Daylight Time. Sometimes I like to look at the futures, but I'll be honest with you, usually they fall right in line. And if they are out of line, usually the chart kind of rectifies itself by Monday morning. I remember one time watching the futures market be down 25 points in the S&P on a day when the S&P was supposed to rally on Monday, and went to bed and they were down huge. Woke up in a complete reversal. But anyway, before we look at the chart, I just want to remind you that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research, and you need to make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. So take everything I say with a grain of salt and do your own research. Okay, we're going to start out actually looking at a 9-day chart. And we're doing this for one reason, really, and one reason only. And that is, I just want you to see this all-time tops line right here that is defined by the 2000 S&P 500 top in the mid-1500s. And then the 2007 top that was a little bit higher, but not much, still in the upper mid 1500s. And now we extend this line out here, and folks, we are above this line now by an unmistakable margin. This is that line right here, which is currently at about 1600. And if you take 1600 as the de facto line, in other words, let's say it's right at 1600, currently the S&P is 10% over that line. So I would think that that this line is just, I mean, at this point, it's obliterated. If the S&P were to encounter some serious selling pressure and we were to come down to that level, irrespective of where we might be with regards to our rising trend lines, I think that level should produce strong support. Okay? I just want to point that out. I was just amazed at how far above we are over this line right now. Now let's zoom in a little bit closer. Well, I tell you what, let's leave it right here because my lines are in good position. Let's just zoom in this way to show you that we'd been looking at a potential line where I thought we should be prepared for possible resistance. But the way the S&P has been moving lately, I didn't want to say that this line could not be taken out. As a matter of fact, it's almost like this could be a consolidation period over about 4.5 months, or roughly 5 months, where the line that would normally be relatively flat is slightly upsloping. That's kind of the way it looks. And you can see that we have our turquoise line still working back from November. We had November, we had June, we had late August. We broke it just a little bit in early October. But now here we are. We powered up off of that, and there were reasons to think that we might reverse down here. It wasn't just totally willy-nilly that the S&P did this, but we reversed, and now it looks like we're heading up. And the question now becomes, where is our next resistance level. And the other thing that's really interesting is, and you just the chart looks a little conflicted right now, because the way we moved up over the past 3 days really looks, frankly, pretty weak. I'll be honest with you. It's not showing a lot of conviction. It's just showing a lot of reluctance. It's not conviction to go up as much as it is reluctance to go down. And just about every trend line that I've drawn, or that we can draw, over the action of the past two and a fraction weeks, none of it's lining up real good. We had this line right here that we had kept our eye on, but you remember this line was just rising too steeply to be counted on to give us much in the way of long-term support. Same with this little line right here. We identified it, but hey, it's not going to hold. It's going to be a move up, and then it's going to give way. Then we identified this support line right here. Again, too aggressive. It's moving up too quickly. Cannot sustain that kind of upward momentum, because in 3 days the S&P over this orange line, the S&P moved from about 1700 to 1742. That's it's about what? Well, it's only about 2%. But the market can't go up 2%. It can't go up 1.5% every day. It just can't do that. So we went sideways on this. Then we broke this red line, and for the past 3 days, we've just kind of been meandering up. So I would still watch this little support line right here, but my gut feeling is that if we come down and we test maybe this support line in the low 1700s, I would think that would be a buying opportunity. I wouldn't take my eyes off the ball, but that may be a good buying opportunity. But I don't know that we're necessarily going to do that because of this strange reluctance that we've seen here for the S&P to head down. As a matter of fact, if we start the day off strongly on Monday, then we look at the past 4 days of trading, and we may be seeing a small inverted head and shoulders continuation pattern. But I will tell you this, I think we need to see a good strong move up out of that instead of just hanging on, excuse me, instead of this very narrow range that it looks like the S&P has wanted to be in. You could see that on Friday morning we broke out over the top of this line, came up to these previous highs and couldn't hold it, but then this line did catch the market, and it did not break. This really looks to be in the shape of a potential bear flag, but it's not a bear flag until this bottom line breaks. And on Friday, it didn't break. I thought it might, but it didn't. So now I would watch this top line right here and say we may be dealing with a small inverted head and shoulders continuation. And if that is the case, well, we're pretty much well set up to measure the depth of the head. And since it's a horizontal neckline for the most part, we would know that if we get up above this line, then we should be looking for a move now of about 1775. So, as the week went, we came into the week, and the first thing that happened on Monday was we broke this support line that we'd been watching for a couple days. It's only lasted 3 days, but that really shouldn't have caught us by surprise. And then we sold down in this little pattern here that, as I recall, we correctly identified as a potential bull flag. Right here. We got a nice move up out of that. We came up to resistance, which we had identified already, and then we went sideways, but with the idea coming into the week that these support lines are too steep to last for very long. We midweek Wednesday we broke this red support line, but we also were looking at that blue consolidation top line that slopes up a bit, and it appears that at least that line gave the S&P some support. And if we look at that line again, I think we go to a 2-hour chart, we pretty much see where this line fits in. It's got an it's got another touch back a little bit further back right here. It's not a perfect line, as you can see, because these three tops here, here, and here do not line up. But we are now above that line. And it would not surprise me one bit if we see, before year's end, a move over 1800 to even run up to the mid-1800s. That just wouldn't surprise me. So right now, it is a little hard to get a solid read on things. We currently do not have a typical strong pattern for us to rely upon to give us a sense of how far up this move could take us. What we have for the most part are trend lines. And these trend lines, instead of telling us that we think we should move up to such and such a level, the trend lines are more there to tell us if we get there, then we would expect resistance. So right now, as I look at this chart, since we're at all-time highs, I don't see any reasonable expectation for resistance until we reach either this, or this. So it looks to me like there's a clearing in the woods, if you will. There's a clearing in the path that could take the S&P up to the mid-1800s. Now, I just want to take one more look at something here and see if we might have the workings of a channel that might be parallel to this resistance line, but instead of going back here to late October, let's go a little bit earlier in October and see if we might make a little sense out of that. So, with that in mind, I'm going to kill this line right here, and I'm going to make this line a fairly unique color. Let's make it, well, I don't see anything on here that's really dark blue. Well, I do now, but tough. Let's create a parallel line to that, and let's stick that down here. Back on these earlier, the lows that were set in the second week of October. Let's just keep that handy. Okay? You see where I'm going with this? I believe there's probably a parallel channel that we are inside of right now. I just don't think we have quite enough information to know where that support line is supposed to be. I believe we got good information on our top resistance line, and you remember it for a while I had this put down here on this dip, but I'm going to revise that. I'm going to go back down to the lows on the 9th of October. Let's extend that on out and see if that makes any bit of sense going forward into the next week. So really, I think the past week was pretty good overall. We saw some things break, but none of that really should have come as any surprise, just because of the aggressive slant that all of our support lines had for the past few weeks. You just can't expect it to go up and up and up and up at that kind of fevered pitch. So we find ourselves now, for the most of last week, having broken some support lines, but having at the same time had an all-time closing high on Friday. So we've gone sideways for effectively, well, you could say 4 days, and I could even back up and say the entire week was pretty much sideways. So coming into this week, let's see if we can get over this little neckline. Let's see if this behaves like an inverted head and shoulders pattern. And if it does, then we should be seeing the 1770s. So let's see what happens. Watch the futures overnight. Maybe that'll give us a little bit of a hint again. By the way, some of the stocks that I'm holding long still look like they've got plenty of room. There's some stocks that look like they're on the verge of a potential breakout. I'm really liking Ford at this point in time. I bought it back at $15 a share, and it tried to get over 18 this week, couldn't quite do it, but there's reason to believe that Ford can get into the low 20s, and if it does that, then it's going to run, I believe, for a while. U.S. Steel is doing very well. So, and you know, you don't want to buy when everything is perfect and all the businesses are running on hitting all 8 cylinders. You want to buy when the technicals are looking strong, but the fundamentals maybe need a little bit more time to work things out, because that means that people are scared of the stock. But if you can get into a stock that people are a little bit scared of, but the technicals have turned around, then you can sometimes really get in and get a sweet deal. So guys, that's the video in the weekly review for the week ending October 25th. I really appreciate your time, and I especially appreciate your support with your subscription. And take care.